Hello and welcome everyone to Gold Asset of the Day for the 15th of September 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we go into a new week here, the major focus is going to be Wednesday's FOMC statement. And again, this is where you need to be very nimble at the moment, making sure that you're capitalizing regularly on the breakouts that we see on the metals, lock in those profits before you then get the pullbacks. In fact, we've just banked 575 points on platinum from a position that we executed just last week at $911 per ounce. So for 575 points there, each 10 lot contract that you would trade platinum, that would equate to $57,500 profit in just 1 week. Each 1 lot contract, that equates to $5,750 profit. And that's just within the matter of 1 week. We're seeing very fast moves at the moment with the precious metals. We also mentioned to you in detail over the month of August the positioning that you wanted to get ready for palladium. Elon Musk is set to unveil the latest developments for Tesla at that one-day battery event, and with that we have seen Tesla prices today increase by 6%, and both our positions on palladium, they're back up over 4,000 points at the moment. These times right now, unprecedented times that we're in currently, they provide huge profitable opportunities here for the precious metals. We've of course seen silver prices over the last quarter up 50%. Gold prices, they're broken out to all-time highs, particularly with the current environment that we're in right now, where we see interest rates near to zero. We've of course seen huge amounts of quantitative easing to support the markets that came in from March onwards, and all of this provides a perfect opportunity for huge moves here on the metals. But again, it's not just about buying and holding here the metals. If you did that going back over the last month or so, you would have made no money. You need to be making sure that you're banking regularly at the upper end of the ranges. You're aware of where the key areas of liquidity are. Gold today was a classic example. So many retail traders FOMOing in today after gold broke above $1,970 per ounce, only to see it then tank 200 points very quickly this afternoon, where it's back down towards the levels where it began at the beginning of the week. And we have of course got a major news item just tomorrow, which is the FOMC statement. So there's a very particular way that gold will move in the lead up to that, normal book your profits that you see in the lead up to a major central bank announcement, and then the way that it will often trade afterwards as well. You want to be keeping a very close eye what the hedge funds, the money managers are doing in this market, how the institutions are positioning themselves, how the algos, the market makers, are also making the market move between very key levels of liquidity, where you need to be aware of these zones so you can really profit and make sure that you're getting in nice and tight with your entries and then banking profits and not getting FOMO. As many retail traders, they're getting confirmation at the wrong prices just as they're getting long and triggered into their positions. The market is about to dump in the opposite direction. They then get chopped up and get stopped out of their position. Last week was classic again. Gold broke down at the beginning of the week with the usual counterflow that you see over Monday and Tuesday. Many traders started to sell short and panic sell out of their long positions. They then were unable to capitalize on the big move that we've seen, a 500-point breakout in the latest week, which we of course caught across gold, silver, platinum and palladium. So it's been very lucrative, but you need to know how to trade the ranges, the current volatility. These market conditions are great. We have event-driven markets. Last week, we of course had the European Central Bank announcement. The week before that, we had the Jackson Hole Symposium. This week, we have the FOMC statement. And then towards the end of the month, we're going to have the first round of the presidential debates. And this is all going to be leading up over the next 2 months here into the US election, which will provide some fantastic opportunities to benefit from this volatility with the precious metals. You absolutely need to make sure that you're set up for that. Over this week, again, I would look to capitalize on the range-bound price action. We took a lot of positions last week on the sell-offs, where we've now banked a lot of those profits on the breakouts, and we've managed to make sure we protected those trades and also locked in profits too. What I would look at again over this week on gold would be to capitalize on those pullbacks as buy opportunities, but you need to be patient and not FOMO in. I would look at the potential for dips coming back below 1,940 down to 1,900 this week. That would be the zone where I'm looking out for buying evidence. We've tapped down towards that level at the beginning of this week. We broke out to 1,970, which gave us a great opportunity to lock in some profits across a number of different trades, including platinum. And now we're seeing the pullback, which is very common towards an FOMC statement. So again, major zone that I would look at for liquidity and buy opportunities, as long as we get supported, would be a move between 1940 down to that 1900 zone. If we find support, we continue to hold above that level on a closing basis. This is where it can give you some really great opportunities to wait patiently for the dips and then reload and then take advantage of the range-bound price action that we're seeing at the moment on the metals. That's really a great way to capitalize currently. And of course, what you want to be utilizing is a research-driven approach where you are aware of what the hedge funds, the money managers are doing in the market, what the institutions are doing, making sure that you're not using 100% technical analysis approach. That just will not work in this market conditions where so many traders are using outdated technicals. They're using indicators to get confirmation, which just doesn't work. They get chopped up a lot, or they miss out on trades, or they keep getting stopped out. You definitely want to avoid all of that. You want to be utilizing the research-driven approach to get edge, where you're utilizing our market intelligence or research to give you that edge. So if you would like to find out more, become a member of the Gold and Silver Club, join a community of successful traders. There is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.